Hello everyone, welcome back to my channel. So today we'll understand bank reconciliation statement. So the bank reconciliation statement is a statement to prepare to reconcile balance as per cash book with the balance as per passbook. So now the first basic question is, why do we even prepare bank reconciliation statement? See, in business we maintain cash book and bank maintain passbook. Ideally both should show the same balance, right? But in reality they usually don't match. Now the question is why. So now let's understand the main causes of difference between cash book and passbook. There are only three reasons: timing difference, transactions, and error. Let's start with the first one, timing difference. Suppose you issue a check today, you immediately record it in your cash book. But the bank will record it only when the person present that check. So for few days, your cash book and passbook will show different balances. Same thing happens when you deposit a check. You record it immediately, but the bank takes time to clear it. So again, there is a difference. And the second one is transactions made by bank. Sometimes bank record transaction and we may not know them immediately, like bank charges deducted, interest credited by bank, or customer who directly deposited money in our account. So these first appear in passbook and later we update in our cash book. And the third reason can be error of omission. Sometimes mistake happens. Maybe we forgot to record transactions or entered wrong amount. Even bank can make these errors. So these mistakes also create differences and they must be corrected before preparing BRS. Let's start with a problem. Balance as per cash book 20,000. So basically, when we start with the cash book, our goal is to arrive at the passbook balance. So this is cash book and this is passbook. So the first adjustment is check deposited but not cleared 5,000. So we have already added it in our cash book, but bank has not recorded it yet. So we have to match with it passbook. So what happens is when you deposit a check, your cash book has increased, but bank has not recorded it yet. So in order to match, we have to decrease our cash book. So less 5,000. And the second adjustment is check issued but not presented 10,000. See, we only have to increase or decrease our cash book because the starting point is cash book. Okay. So many students try to memorize or whether to add or subtract, but it is better to think logically and solve the problem. Okay. So now let's come to the second one. Check issued but not presented 10,000. So we have already deducted it in cash book. Means we have given check to someone, which means our cash book has decreased. So to match it, we have to increase our cash book. So add 10,000. Add 10,000. And the third one is bank charges 500. So bank has already deducted it. Means our in our passbook bank has deducted 500 as our bank charges. So passbook decreases. So in order to match, we have to decrease the cash book. So less 500. And the fourth one is interest credited by bank 2000. So bank has added it. Means bank has given interest to us. Means our passbook is increases. Passbook has increased. In order to match, we have to increase our cash book. So add 2000. So the next point is direct payment by bank. So in this case, the bank has directly paid amount to the creditors. So in this case, the the passbook has increased. So in order to match, we have to decrease our cash book. So this is less 8,000. And the sixth adjustment is direct deposit by customer 12,000 means some customer has directly deposited in our account, means our passbook has increased. In order to match, we have to increase our cash book. So add 12,000. And bills collected by bank has received some money. Our passbook has increased. In our bank account we received bills and our passbook is increased, and to match we have to increase our cash book, so we add back. So add 8,000. So the last point is dishonor of bill. So first let us understand what is this dishonor of bill. It is nothing but payment not received. It is simply means expected payment is not received on due date. So what happens because of this? So the first thing is the money which we thought will come into our account does not come, so our bank balance will become less than expected. So what happens is in our passbook the payment is not received, so bank will decrease. So our passbook is decreased. In order to match we have to decrease our cash book. So less 1,280. That's all for today. Thanks for watching.